And we're live. Welcome back to the Crypto Sherpa channel where I read you that crypto news. I even moved the camera around and there's Amanda. Hi, Amanda. She's on screen. She's my little work buddy here chilling as I do the show. She won't be on the camera anymore. I just surprised her with that one. But yes, welcome back to the show. We got a couple articles to go through. As the title said, UAE residents can now trade crypto directly with their big bank account. Now that's kind of big deal because that's what I've been waiting for when you actually do trades and interactions with crypto and Bitcoin in your own bank, because that's the only time I'd want to actually borrow against my asset. I don't want to go to any of these companies out there. We saw what happened back in 2021. So it's like a no. But if it hits the bank account, I may feel like maybe a little bit more confident to just borrow against it a little bit. But again, if you do this, you do not have self-custody at all. You're giving up some self-custody rights for it. So I wouldn't be giving away all my assets, just how much I would be borrowing against. But no, let's go with this article. It comes from Cointelegraph. And the new integration enables this to directly convert between the UAE dirhams into Bitcoin and Ether using the M2 spot market. So we got the Cointelegraph uses this cover all the time. It has to do with the UAE. But the crypto exchange M2 announced that it will allow residents in the United Arab Emirates to buy and sell Bitcoin and Ether directly using their bank accounts. In an announcement shared with Cointelegraph, the digital asset custodian said that the new integration will allow UAE residents to directly convert their dirhams into Bitcoin and Ether through trading pairs listed on M2 spot markets. Users can trade Bitcoin and Ether for dirhams and vice versa. In addition, users can also deposit and withdraw their dirhams. Now, the M2 team believes that the new integration enables users to swiftly adapt to market changes, allowing them to easily convert their local currency and into crypto. Also, it gives the banks a more just a thorough look on their transactions. Stay on our side, the CFI, centralized finance side, because if you do everything in DeFi, we don't know what you're doing. So of course they want to make it as easy as possible for you to use because they want you to use it. But again, if you learn the DeFi side, you are A-okay and safe. But let's go over the wider accessibility of the virtual assets in the UAE. According to the M2, the new integration allows the exchange to expand its offerings amid a rapidly evolving landscape. The team also believes that the new integration is a milestone for the wider accessibility of virtual assets in the region. Kimmel told Cointelegraph that the new integration could also help everyday investors, especially those who are not fully entrenched in the nuances of the trading environment. Due to higher levels of familiarity and some of the highest trading volumes on the market, BTC and ETH tend to be the go-to virtual asset for entry-level investors looking to get involved in the space, Kimmel added. He also said that the UAE is one of the world's strictest in the consumer protection. So in addition to the executive highlighted that this move is also regulated by the UAE government, which he describes as one of the world's strictest regulatory frameworks that prioritizes consumer protection. Now, throughout the years, the UAE has tried to better protect consumers in crypto. In 2022, Dubai's Virtual Asset Regulatory Authority required marketers and promoters to provide more clarity in their advertisements to better protect consumers. And then also in 2023, the UAE established a new federal law dedicated to protecting consumers and preventing FTX-like entities from attempting to commit fraud in the country. Now, the government will also impose sanctions of up to 10 million AED or $2.7 million US and fines for the violators. Kimmel also previously said that the ADGM's licensing process was demanding because of its high standards for multilateral trading facility permits. However, the executive also said that this is due to diligence, allows the UAE users to trust that license platform and meet the country's security and transparency standards. Now, the UAE continues to be a strategic region out there. In previous Cointelegraph interviews, business consulting firm executive Tao Zhao said that the VARA licensing process could take up to a year to complete, and the executive believes that the stringent framework reflects the region's dedication to maintaining market integrity and guarding investors. While the process is difficult, the executive believes that it's worth it, the benefit. The executives believe it's worth it. Now, the benefits include favorable tax policies, access to global markets, and a safe environment for innovation. So by having all these policies in place, they got pretty pretty solid for what they were doing out there. So, which is why they're able to throw into the bank. Now, who's the M2 spot market? It's an exchange. I believe they're then working with the banks out there to do it. But no, yeah, so UAE residents can now trade directly with crypto using M2 spot market. So yeah, that's our first article for you. And yeah, yesterday I covered the article of how Russia is like moving into Bitcoin transactions for trading just to get by sanctions and everything. And right after we heard that news, El Salvador proposes settling trade with Russia in crypto. So yeah, it's pretty much working out already, and makes sense that El Salvador would do that since they did make Bitcoin legalized tender back in 2021. Now, according to a local media, El Salvador has proposed using crypto to settle trades with Russia. Alexander Ilukin, the first secretary of the Russian embassy in Nicaragua, head of the office in El Salvador, said that the measure would simplify trade dealings, considering El Salvador recognizes Bitcoin as legal tender. Now, El Salvador joins the Russia into de-dollarization agenda. Earlier this week, Russian lawmakers said crypto would be used for international trade. As per an announcement, the legislation, which will go into effect in September, will enable Moscow to avoid Western sanctions. Now, Alexander Ilukan adds that El Salvador and many Latin American countries out there use the US dollar as their official currency, which is currently under sanctions in Russia. So he said here in his tweet, or not tweet, but in his quote, "We have difficulties with calculations because the official currency in El Salvador is the US dollar. And as an alternative, El Salvador offers to use cryptocurrency to trade operations we can." So that's kind of good for Russia because, again, like most Latin American countries, like he said, use the US dollar, and that's what they're sanctioned from. So yeah, if more of these countries adopt the Bitcoin standard, then it's going to be just fine. But Ilukin acknowledged El Salvador's decision to adopt Bitcoin as legal tender. He adds, "Within the country, any tourist can pay for any services with Bitcoin, but in our country, Bitcoin is not widespread, so we are looking for other ways to strengthen trade. The government of El Salvador is ready to continue economic cooperations with Russia." We have Geopolitically, El Salvador has maintained its independent foreign policy by refusing to side with any party involved in the Russia-Ukraine war. Earlier, Ukraine President Vladimir Zelensky team hoped to secure El Salvador's support by Lukin notes, but they did not succeed in doing it. So yeah, so El Salvador wants to work with these guys, and they most likely will with it. But yeah, this is just the first country out there to announce that, yeah, we're willing to work with you, and plenty more are going to jump on that bandwagon. But okay, let's move on. This is kind of moving a little fast. It's been a long day, and I feel like I'm going through these articles as fast as I can because it's kind of hard finding them. I had 30 minutes to search, and there wasn't really much going on. But this next article comes from Cointelegraph, and BlackRock CIO says that they have no Solana ETF plans in the near future. BlackRock CIO Samara Cohen stated that introducing a Solana ETF is impractical, and there is no demand for altcoins other than Ethereum. So yeah, so there will most likely not be a Solana ETF out there. I'm getting distracted. Hey, Amanda, you leaving? Say goodbye to the people. Oh, your waist.
If that's where the camera is.
It was where it was. You did good. All right, I'll see you online.
Yeah.
All right, let's continue this news article. So yeah, BlackRock CIO says they have no Solana ETF plans in the near future. The BlackRock CIO Samara Cohen stated that introducing a Solana ETF is impractical as there is no demand for altcoins other than Ethereum. And that's pretty true out there. So on Monday, July 29th, in an interview with Bloomberg, BlackRock CIO for ETFs, Samara Cohen, confirmed that the firm is not planning to pursue any additional crypto ETFs, including spot Solana ETFs. In the near future, Cohen noted that while Bitcoin and Ethereum have met their expectations, no other altcoin is close to meeting that criteria. So yeah, there is no need for it. But BlackRock does have no appetite for a Solana ETF. While Bitcoin constitutes a 55% of the total crypto market, Ethereum has a share of 17%, and the rest of the altcoins are all below the double-digit contributions. Thus, there could be liquidity and manipulation concerns associated with introducing other crypto ETFs like the Solana ETF into the market. Now, BlackRock's Cohen said that there are major technical difficulties in bringing other crypto ETFs into the market, as the appetite for crypto ETFs, including Solana, isn't there. And in a Bloomberg interview, Cohen said that we really look at the investability to see what meets the criteria and what meets the bar to be delivered in an ETF. And for us, both in terms of investability and also what we hear from our clients, Bitcoin and Ethereum definitely meet that bar, but it'll be a while before we see anything else. So yeah, so no one's really looking to incorporate any other ones like these two ETFs. That's basically really all we need. But Samira Cohen echoed this stand on BlackRock's head of digital assets, Robert Michnik, while speaking at the Bitcoin conference last week. Michnik said that there is no scope for future crypto ETFs in the market. And on the other hand, asset managers like Van Eck are pushing ahead for the Solana ETF, stating that they are seeing strong demand from the crypto community. Last week, Solana price managed to overtake BNB for the fourth spot. However, amid the broader market sell, Sol is trading 5% down at $182 at press time. And again, a lot of those trades too were wash trading with the Solana meme tokens being able to look like there's transactions on there. But yeah, like, just because Van Eck's pushing a Solana ETF doesn't mean BlackRock. I feel like BlackRock's just the main guys out there that if they want it, they're going to get it and everyone else will follow. But all the other guys, nah. But crypto ETFs to be part of the model portfolios. BlackRock CIO Samira Cohen also stated that crypto ETFs would soon be part of the model portfolios by the end of 2024. Her statement came while answering the question asking where big fund houses such as Wells Fargo, Morgan Stanley, UBS, and others were with onboarding and promoting crypto ETFs. She added that all these wirehouses are conducting due diligence, risk analysis, etc. while weighing the role of BTC and ETH in their portfolios. Now, here's a tweet from Bloomberg. BlackRock CIO of the ETF Index Investment Center, Cohen discussed the iShares Ethereum Trust and expects we'll see allocations of crypto ETFs and model portfolios by the end of the year. And there's a little clip showing it. Now, BlackRock has successfully introduced the Ethereum ETF in the market last week, and BlackRock's ETHA continues to drive the most inflows among its peers. So yeah, so if you're just curious if like we will be seeing any future ETFs, don't count on it. Bitcoin and ETH, that's all we need. So yeah, so that's straight from the bull's mouth, or the chief institutional officer's mouth out there. And yeah, let's move on. Here we got some England news out there coming in. Is that the UAE? No, it's not the UAE, the EU. So this is happening in the EU. This article is coming from Cointelegraph, and England's Law Commission proposes new property category for crypto assets. The Law Commission's final report advocates for legal reforms to better protect the unique features of the digital assets. So yeah, even the EU is working on their regulations, and yeah, England's just next up in line. But the Law Commission of England and Wales urged the United Kingdom government to categorize all crypto assets as a new form of personal property in its final report on digital assets. So very nice. The Law Commission is an independent body primarily tasked with reviewing and recommending law reforms in England and Wales. On July 30th, it published a supplemental report highlighting the inadequacy of the current categorization of personal property and its legal implications on crypto assets. Here is a tweet from the Law Commission saying how they want to draft that bill to make crypto personal property, and that's what it really is. Now, the demand for a new type of personal property, because it's not your traditional property out there. This is something new, so they got to try to figure out, talk about it, and that's what they're doing. So English law categorizes personal property into two main types: things in possession that are tangible property, and things in action, which are intangible property, such as debts or rights. Now, the Commission argued that digital assets, including cryptocurrencies and non-fungible tokens, can possess both qualities and hinder the dispute resolution in court proceedings. As a result, it recommended that the creation of a third category takes place, and that ensures property rights related to crypto assets are clear and enforceable. Very nice. I think the whole world needs to take a keynote from this playbook right now. But we conclude that the flexibility of common law allows for the recognition of a distinct category of personal property that can better recognize, accommodate, and protect the unique features of certain digital assets, including crypto tokens and crypto assets. The Commission issued a draft bill demanding a separate category for crypto assets to help create a robust legal framework and aid the growth of digital assets in the sector in England and Wales. Now, here is that bill and the draft for it. Make provision about the types of things that are capable of being objects. It be enacted by the King's Most Excellent Majesty. Oh yeah, the King. I keep forgetting that we're not the Queen of England. Like, she passed away. So now it's the King of England's going to do it. So England and Wales regulators to review the draft bill. The draft bill leaves it to the courts to develop the third category for the crypto asset, which could be amended in the future without disrupting the legal proceedings of other forms of personal property. The Commission said that the government is currently considering the recommendation and the draft legislation, and the Bank of England and the Financial Conduct Authority authorities. The UK financial regulator recently issued a consultation on the draft guidance for their digital securities sandbox. Now, according to a joint consultation and draft guidance released on April 3rd, the sandbox is designed to allow participants to test distributed ledger technology for trading and settlements of digital securities and shares and bonds. So yeah, so that's what's going on in the EU. Oh, I can't reach my phone. It's already over there. But no, so yeah, the EU is looking to add a separate category now because, again, like when it comes to laws and courts and everything, it gets kind of fishy because crypto is both. It's not a tangible asset, but it's also like the other thing too. So they're going to make a whole new category, and hopefully the rest of the world can follow that playbook. But yeah, let's move on. What else is going on? This next article is coming from Decrypt, and Terra blockchain exploit drains over $4 million in tokens. The exploit saw around 60 million Astro tokens drained, sending the price of Astro plummeting to an all-time low. So, yeesh. Hopefully none of you guys were using that or had that token on you. But again, I always like covering at least hacks or whatever goes on in the space so you know what's going on. But let's go through this article to hear about it. The Terra blockchain was halted on Wednesday morning after an exploit drained millions of dollars worth of tokens. In a tweet, Terra stated that the blockchain would halt at block height 11430400 and to enable validators to apply an emergency patch to address the exploit. Here is that tweet from them addressing their users. Attention, Terra users, please be advised that the chain will be halted shortly at this block height and transactions will not proceed during these times. We will be working with the validators on Terra Phoenix to apply an emergency patch and thereafter reapply it later on. So they're working on it, but hopefully you guys weren't affected by it. But following the blockchain's halt, the network resumed the block production at around 4:19 a.m. UTC per a tweet from Terra, and with validators holding over 67% of the voting power on the chain having patched their nodes against the exploit. According to blockchain security firm Boyzen, the attack saw over $4 million in tokens drained from the bridged asset, including around 60 million Astro tokens and 2.7 Bitcoin. Eesh, that's a lot of Bitcoin, along with 3.5 million in USDC and 500,000 in USDT stablecoins. Now, following the exploit, the price of Astroport's Astro token plummeted to an all-time low of about 1.5 cents around there, and is currently trading at 2 cents, down over 53% on the day per data from CoinGecko. Now, Terra's own Luna token, meanwhile, settled around 2.7%, down on the day of 39 after dipping. This is part of the Luna. Why are people still using that blockchain after that whole thing back then? Why? So I guess that's on you guys. But per Boyzen, the attack exploited a known vulnerability and involved the deployment of a malicious Cosmo Wasm contract. The potential exploit was disclosed and involves a re-entry vulnerability in the timeout callback of the IBC hooks. Now, part of the inner blockchain communication protocol used to initiate contract calls and enable cross-chain swaps within it. Now, Terra Luna, also known as Terra 2.0, is a hard fork spun off from the original blockchain dubbed Terra Classic. In the wake of the 2022 collapse of the Terra ecosystem, the class was precipitated by the failures of Terra's algorithmic stablecoin, UST, and sparked contagions across the crypto ecosystem. So yeah, just for me, like when I see like a project that went down, we had stuff with it, I kind of lose all faith in it at that point. So when Terra went down, anything building on it, I tended to stay away from it. Same with Solana. I know Solana is very big out there, but there's no plan of an ETF out there, but also they went down a couple times back in 2022 as well. So it's like once that blockchain goes down, it's done for me. But yeah, so that's that exploit that happened for you guys. I hope you weren't affected by it, but if you do know somebody who is using the chain and the Astro token, just let them know, and hopefully they're aware of that if they aren't. But yeah, so that's, I believe, the only like hack news I got for you. So luckily there was nothing else going on there. But let's move on to our next article. This one's coming from Crypto Potato, and there's been a strong accumulation demand for XRP as the Ripple price tapped its 4-month high. Now, data suggests a sharp rise in the high-value XRP wallets, indicating growing investor confidence in the crypto asset. Amanda left. I know she's a big XRP fan, so I was going to cover this article for her. But no, let's go through it. XRP climbed to 66 cents on Wednesday, surging by 8% over the past 24 hours from 60 cents, a level last seen in the third week of March. Now, the latest upward price action comes amidst important developments in the XRP ecosystem, renewed investor optimism, and the market as accumulation trends it testifies. Now let's go over the XRP accumulation. Zoom in, I can see that you guys can't really read along with me. So there has been a significant surge in the number of wallets holding at least 10,000 XRP tokens over the past 5 weeks. According to the latest data shared by Santiment, this figure has reached a 6-month high of 279.4 thousand addresses holding that much XRP in them. Now, this sharp increase in high-value wallets signaled a growing accumulation trend among investors, potentially reflecting bullish sentiment toward XRP. Now, notably, the correlation between these two large holdings and XRP's market value has been strikingly consistent throughout 2024, as per the on-chain crypto analytic platform. Such a trend suggests that as more high-profile investors accumulate XRP, the asset market value trend will rise accordingly. Now, the SEC filings on Tuesday also appears to have induced a shift in sentiment among XRP holders. The filing in question indicates plans to revise its Binance complaint, which could affect tokens such as Sol and Matic. This revision might delay rulings on whether these tokens are unregistered securities. As a result, XRP traders now believe the SEC might ease its stance against fintech firm Ripple as its lawsuit approaches resolution. Speculation and about a potential settlement between the two parties spread widely before their closed-door meeting on July 25th, but to no actual result. Now, 1 billion XRP tokens have been unlocked. Another important development in the ecosystem is that it is scheduled release of 1 billion XRP tokens by Ripple in August, and this practice is part of the company's strategy to maintain transparency in releasing its holdings, which began in 2017 when Ripple allocated 55 billion XRP tokens into multiple escrow accounts. Now, the upcoming unlock will release XRP tokens worth approximately $641 million based on current prices. Although increasing the token supply typically would lower the price, and certain research argues that it might actually boost an ongoing bullish trend due to the increased liquidity. Now, Chris Bernski, partner and venture capital from Placeholder and former crypto lead at ARK Investments, recently explained that large unlocks of tokens are a large complex event that interfaces with market psychology. So simply put it, large unlocks can be bullish catalysts in bulls and bearish catalysts in bears. They unlock liquidity to continue prevailing the trend. So again, it's seen as it's a hit or miss. Like, are you bullish on this trend or are you bearish? Either way, it boosts it for when you have token releases. So again, it messes psychologically with that. But no, so that's the XRP news for you. Just again, maybe they revise it because of the Sol Matic thing with Binance going on, but people are holding more XRP in their wallets. Me, I prefer Bitcoin, but again, I know my friend Amanda, as you just saw, she loves it, and she's definitely acquiring more right now. But yeah, so that's the XRP for you. Let's continue on. We have about 2 more articles. The next one's coming from Decrypt, and DraftKings kills fantasy sports NFT business amid a class action lawsuit. So another class action lawsuit that's taking place. There's a law in the crypto area. But DraftKings NFT-powered fantasy experience is meeting an abrupt end alongside its dedicated marketplace on Etherscaler Polygon. So yeah, let's learn about this. So do you guys use them? I don't, but I've always heard about them. We're going to go over the brief part. But the fantasy sports giant DraftKings informed users Tuesday that its Polygon-powered NFT experience, Rainmakers, has met an unceremonious end and affected immediately, which is sad. Citing that recent legal developments, the company wrote in an email reviewed by Decrypt that Rainmakers and its associated NFT marketplace have been discontinued. Meanwhile, users have the opportunity to relinquish those game pieces in exchange for a cash payment or withdraw them to a self-custody wallet. Now, stemming from 2021's agreement with Polygon and Ethereum scaling network, DraftKings Rainmakers let users compete in fantasy sports contests across football, golf, and mixed martial arts. The value of the NFT is sometimes fluctuated based on athletes' performances and could be resold on a dedicated marketplace. They mentioned to all the people out there, we extend our heartfelt thanks to all of you who made Rainmakers special. DraftKings told users in the email Tuesday, adding that the decision was not made lightly. DraftKings had still been tweeting about Rainmakers competitions as recently as Monday, so they were still tweeting about it, but I guess it happened so fast. The abrupt end to the Rainmakers and DraftKings NFT marketplace was motivated by a recent decision in Massachusetts federal court. A person familiar with the move told Decrypt in a class action lawsuit filed last March, DraftKings users alleged that Rainmakers NFTs were offered as unregistered securities under the Howey test, an illegal framework for assets. Now, the DraftKings moved to dismiss the lawsuit, but Judge Denise Jefferson Casper of the United States District Court of the District of Massachusetts ruled that the lawsuit could proceed to trial. Now, Casper found earlier this month that the lawsuit plaintiffs plausibly alleged that the DraftKings NFTs satisfy 3 prongs of the Howey test, including investment of money in a common enterprise, where an expectation of profit is derived from the efforts to others. Now, here's a tweet from Rainmakers and DraftKings. Last year's top fantasy WRs, which receiver are you most likely to add to your lineup? So I guess this is them still adding their stuff on Monday, just letting people know, yeah, who are you adding? And then bam, they're gone. But it will never spend another dollar at this dumpster fire. Reddit user NOGAP4123 laminated in DraftKings community. Another username, Sir Jacko6, wrote, I will be suing if they don't make this right. So a lot of people in the community really do not like what happened. But DraftKings said in a written statement to Decrypt that NFTs and Rainmaker's digital game pieces will remain accessible and transferable as the discontinuation gets underway. It added that the firm will continue to keep its community updated as it follows the right course of action. Now, in June, Dapper Labs, the company behind NBA Top Shot and other prominent on-chain collectibles, reached a $4 million settlement with disgruntled holders of its NFT. And in the lawsuit, customers alleged that the NFTs offered by Dapper Labs constituted unregistered securities as well. Now, it's always been DraftKings' DNA to innovate and disrupt in order to provide the best possible gameplay experience for our customers. DraftKings continued adding the Rainmakers and the NFT marketplace, saw immediate success upon the launch. Now, a separate Reddit user named Aberdeen1964 wrote that DraftKings should finish the season, expressing concerns that a cash payout would be less than the amount that they had spent already. So people are just trying to express their opinions, saying, hey, just please keep it going. But again, it's a lawsuit going on. They just had to, but I wish if only they just did it better and just let the people and the users know sooner. But across several sports, DraftKings NFTs notched $280 million in total sales, including the secondary market trades. According to CryptoSlam data, as the NFL season kicked off last September, the project notched its best month with $21 million in total sales across the 30,000 unique buyers. Now, while DraftKings NFTs could sometimes fetch thousands of dollars on its secondary market, a top sale of $70,000 took place 3 years ago, and a majority went for small amounts of change that include what could be the project's last transaction, when a Rainmaker NFT sold Tuesday for 33 cents. So that is most likely the final transaction that will ever take place here. But yeah, so sad day for that. Like, who was this again? What's that football player? Gosh, I keep forgetting his name. His wife left him. He was a Golden Arm Patriots player. I am not a football fan. Haven't played fantasy football in a while, but I think this was his thing. But yeah, so sucks that took place. Guess you guys are going to have to find a new place to go. But yeah, so fantasy football, sports, and NFTs on DraftKings is done. So just letting you guys know. Now let's continue with our final article of the evening tonight, which is going to cover how Mt. Gox transferred another $2.2 billion in Bitcoin to new addresses amid the Bitcoin price retreat. Now, this article is coming from Crypto Potato. And Mt. Gox have already transferred billions of dollars worth of Bitcoin to Bitstamp, Kraken, and other exchanges tasked with returning customers' funds affected by the 2014 collapse. On Tuesday, Mt. Gox appears to have freshly transferred over $2 billion to the new address. Data from Arkham Intelligence indicates that Mt. Gox moved 33,105 Bitcoin, worth around $2.19 billion, to an address beginning with the BC1Q26 address line. However, the owner of this address remains unidentified, which it should as be. Mt. Gox distribution. The latest transaction follows previous transfers of billions of dollars worth of Bitcoin to designated crypto exchanges such as BitBank, Kraken, Bitstamp, and SBIVC Trade over the past few weeks. Arkham data shows that the wallet linked to Mt. Gox still contains about $5.29 billion, so that's about at least a little over double that. How much Bitcoin was that they just transferred? 33. So this part still hold another, maybe another 35. 40. But yeah, last week, Bitstamp revealed that it would start distributing assets to Mt. Gox creditors, and meanwhile, Kraken reported that it had successfully distributed the BTC and Bitcoin Cash to its customers affected by the hack that caused the collapse of the former Japanese exchange a decade ago. Now, more recently, the Mt. Gox trustee released a statement announcing that the repayments in Bitcoin and Bitcoin Cash were made to specific creditors through designated crypto exchanges on July 5th, 16th, and 24th. The trustee also noted that the more than 17,000 creditors have received payments as of July 24th. Now, Mt. Gox was one of the world's largest crypto exchanges, managing over 70% of the Bitcoin transactions globally at the time, and it filed for bankruptcy in February 2014, following the theft of 850,000 Bitcoin by hackers. Now, subsequently, a rehabilitation proposal was approved in 2021, promising the return of approximately 90% of the assets owed to affected customers. Now, at first, like they were trying to give them back the value of or the amount of tokens they had back then, or the value of it. It's like, oh, you had $500 for Bitcoin. Okay, we're going to give you 500 back. It's like a whoa. 2014 Bitcoin, $500, and you can get it back in 2024. Yeah, so they did not go for that. And now they're getting kind of it back now. But the long-term holders mitigate sell-off pressure. Glassnode's findings indicate that while the long-awaited Mt. Gox distribution marks a significant victory for creditors who fought hard to be reimbursed in Bitcoin rather than fiat currency, the substantial price increase over the past decade suggests that some sell-side pressure from recipients is inevitable. However, the blockchain intelligence platform observed that creditors' profile leans toward long-term investors, which may mitigate the sell-off pressure in the coming weeks. Now, additionally, the balance sheet of a long-term holder continues to grow, and share of their network wealth remains high in compared to previous market's peak. Now, this indicates that the dominant market behavior has shifted toward hodling, with the seasoned investors holding on to their coins in anticipation for higher prices. And that's what everyone's doing right now. Like, these are the last moments to accumulate your Bitcoin. The bull run's really to start looking at it in October. That will lead into 2025. I think Ivan on Tech, if you don't watch him, I'm always going to keep promoting him because he's what I listen to every morning. Got to pamp it up. But no, it's like he believes the bull run will end towards the end of 2025. So again, at those, make your decision on when you want to take profits. If you just want to keep hodling, because again, we don't know if we're going to run out of Bitcoin this cycle or the next one. But adoption's happening faster than ever, and yeah. But yeah, so that's all the news articles I have for you. I think the biggest one was, which one was it? I think I have to say the England one wants to make a new law proposing property category for crypto asset. I think this had to be the biggest article we covered because, again, we need this for all the other categories. When you go into lawsuits, they're going after the old rules. They're saying well, is this a physical property or is this go under here? So now if they have this, it'll be good. But no, that's it for today's video. I will be back later, or not later today. I'm going to separate all these videos for you so that way you don't have to watch the entire video, but you can just watch each individual article on its own. But looks like, let's go over the fear and greed index right now. Looks like we're going down. We're moving into a fear territory. That's probably because of the price of Bitcoin dipping a little bit. We're at 64,000. So yeah, so as we get closer to fear, that's a great time to buy. But when we get super greedy, there might be a correction, so be careful. But that is it for this video. Bitcoin Ben's going on his show in 30 minutes, so I gotta get off the live stream so he can get on himself. But yeah, so if you like the video content, smash that thumbs up for me, subscribe to the channel, share this with all your friends, and until next time, the Crypto Sherpa is out.